trade basis here is that he's looking for the 4 hour to break above the 20 to consider it
Hmm.
enough momentum and volume to be worth a trade of looking into of interest. So you can see here on these two things, we don't show it until it breaks the 20, which is when it prints past it. So you can see it's touching it. You would be able to see that this is going to break the 20, and you can estimate it is, and there's ways to kind of like speed up the process of how you make that decision. But we're just putting the purple box when it actually breaks the 20. And that other section
Okay.
here, that where the 4 hour is showing volume right there, we're not going to consider that part of this particular trade because that style is when it breaks the 20. The orange boxes are going to basically be where when the 2 hour breaks the 20. So you can see here in this section here, we have two 4 hour trading zones, but there's only two sections where the 2 hour zones were actually like had the 2 hour with it at that time. So that's where that's the more lucrative trading areas. And then what I also have here is that we have the white boxes that come across. That's going to be the 45-minute areas that are going to basically mimic the 45-minute breaking up. So these are basically where areas are going to be possible pumps and each time. So this would be the pumps and then the dip and then the pump and then the dip and then the pump and the dip. So now that we have these two zones, we can come in here and we know that we can look from March 3rd all the way over to where we're at currently to see how this looks on candle wise, right? So now if we go up here, we can hit these boxes up here and we can put the purple boxes in. And we can see that this is the 4 hour zone that became something to look at. And this is the next 4 hour zone because we don't know where the pullback and the bounce is going to be yet for where we're currently at. Okay. And then we're probably going to go back a little bit here because we need a little more data. So here would be in this section here, this would be where the 4 hour breaks and the second move would be considered there. And that would be this section here. And then we're going to slide over to the 2 hour because in this same section I still want to put my 2 hour boxes where the RSI breaks up above the 20 and gives us a double move as well to its bounce. So I'm going to put that in here as well. These are going to be the orange boxes. And then let's see, comes up, 2 hour bounces up, and then here it is breaking the 20 again, and then has its double move into its second peak. So I'm just going to put it here when it doubles down. So this is the orange 2 hour up, and I'm going to take this to where it bounces and kind of ends its little journey there. All right, so this is just going to give us a little more data to kind of like look at as far as like getting some information of what we can kind of like take a peek at and really like evaluate how to decide what's going to be something that we use as a guide to determine the trades that we're actually going to get into and then take advantage of. There we go. All right. And I gotta slide over to the 4 hour. So this is just the outline, the skeleton of the trade. Okay. So the 4 hour RSI breaks above the 20. That gives us our trade. Let's see here, double move, and it comes down here. Okay. So now we can see this is basically what we're looking for. So as we move forward here, we're going to look for this particular trade. And this trade is going to allow us to just track the data, right? It's not one trade. It's going to be, we're going to look at this trade happen multiple times. And as we go forward, we're going to basically put them in there and track them, right? And how you track a trade is real simple. When it happens, right, you simply inside the Discord, and let me kind of like give you an example of that. What you want to do there is, let me change this over to, do I have the Discord in there? Or was I sharing the Discord? Which one was I sharing? No, let me do the whole window. Keep it simple. All right, so you guys can see the window. I'm in Discord right now.
Yep.
Okay, so in here, yeah, you're going to see where you have Crypto 102, and as you go down, you're going to see Ed, Dre, Emily, Joey, and then what you're going to see is the people as they join. So when you see your spot and you go inside there, this is where you're going to post your trade, right? So for instance, let's say on XRP, you'd see a current trade happening, which is what we kind of have right here is the purple boxes going through its agenda, right? So the ideal here would for Ed would be he would be tracking his 2 hour, and then you can see right here he has a 2 hour actually breaking up in this area here. Hasn't finished its double move yet, but how he would actually like put this in is that he would have been tracking this, and then when the 4 hour broke up on this particular area here, he would go into his entry positions, right? And normally in his entry positions inside this box, there's another strategy. And that strategy is going to be broken down to how he would actually enter this, right? So normally what he does when he goes to enter and he gets that section where he would be considering this a trade, he has a couple of different things that he does, but one of the things that he likes to do to kind of keep it simple is there is a moon reset, right? So what we're going to do here is we're going to go down and we're going to actually use, it's a 15-minute moon reset. We're going to do a 10-minute here, okay? And what that means is when the 4 hour decides to be part of the trade and it triggers the trade, right? What will happen is he needs to see a moon reset, okay? And what that basically is that if it's already a blue moon, you see how that is a blue moon right there? So you can see the blue moon right here, right? You guys can see that blue moon right there?
Yep.
So if it was already there, then what he would want is a green, then blue, and then entry on here. So that would be the trigger of the entry, right? Would actually be this green moon here. All right. Now, in this scenario, when that triggers, right, he is actually in that blue moon. So his entry would have came out the same way. It would have came out on this green moon alert, which would be somewhere in here. Okay. So that would trigger his particular entry on that green moon. Now, let's say that if the purple box would have been past the green moon, okay, meaning that the 4 hour came after that moon, then what happens is he waits for the next blue moon to then turn into the green moon. And then from there, that is where he starts the process of going again, meaning that he always wants to go blue, green, blue, green. So then what would happen if this 4 hour happened after this 10-minute green moon, he would be in a situation where he would have to have a blue moon, then green, blue, and then this would become the trigger. That would become the moon that he actually enters on. Does that make sense? He's always going to have a blue moon, then green, blue, green.
So if it was the opposite way and it was a green moon starting, then he'd need a blue moon,
right?
Then a green moon, then a blue moon.
And then green, because he's entering on green. He's long.
Right. And then what if you were trying to enter short? How does that work?
The opposite.
Okay.
So now...
So if he's entering long on that first blue moon you have circled there.
Mm-hmm. Well, no,
so
he's entering on the green moon.
Right. So he needs, if he's entering along, he wants to wait for that blue to turn green and then turn blue, and then the green one, the second one, is when he enters.
Yeah, because here's how it goes. The pattern is blue, green, blue, green. Okay? Now, if it's already blue, then he doesn't need to wait for the green to come. See what I'm saying? But the pattern has to go blue, green, blue, green. 4 moons.
Right.
Right? He does. If he's in a green already, then he needs the blue, green, blue, green. You see what I'm saying? It adds a moon.
Right. And when you say he's in a green moon, that means there's a green moon printed on the chart right now, or he's actually in the trade
print it.
and there is a green moon?
No, print it. He hasn't entered yet. This is the entry.
Okay. Right. Yeah.
So he's waiting for the moon reset. Right?
Okay. Which is the 4 moons you're talking
Yeah.
about.
Well, when he gets his trigger for his 4 hour, depending on where the moon is at that time, as you can see here, this 4 hour triggers and the green moon hasn't happened yet. It's currently in a blue moon status. You see? It's in a blue moon.
Yep. Yep.
So then he would wait for the green, blue, green.
Okay, that now I understand.
Yeah. Green.
Where your purple,
Blue.
where your purple box is, that
Right.
green moon isn't even there yet. I see.
Right. Now, if it happens to where the purple box ends up over here, then it starts when the blue moon comes. Then it's blue, green, blue, then on the next green.
Gotcha. Okay, 100% understand that now.
All right. So now that we have that, those are the 2 different entries that we would see on this last particular call that we would be looking at, right? So now we can go back and take a look at the chart real quick and see like what that would bring for us, right? So you can see here, we'll just move these lines up. So this one would actually be the entry that happened, because at the time that 4 hour happened, it was a blue moon. And if it waited, then that would be the entry would be up there. Okay? Now, that is the first part of the entry strategy, right? So the trade is very simple. You need a 4 hour breaking a 20, and you need the 2 hour in the same direction with it, right? Because you're going with momentum, right? You're swinging with momentum on this. So that's really kind of what we're looking at, is the momentum of how it's building and how it's coming up and down, right? So it's the momentum of the 2 hour, the 4 hour, etc. So what he's doing here is he's using 2 trades, or the 2 entry sides, to where the 2 hours heading up, right? So that's kind of like an alert. That lets him look at it. What that does is it gives you the opportunity. So you see where these orange boxes are? That gave him an opportunity to kind of like look at a trade. So when this 2 hour happened, even though the 4 hour did not happen within this first orange box here, okay? What it allowed him to do was to see levels, right? So what he can do here while he's waiting for the 4 hour is he can kind of put together a channel of support and resistance, okay? So at that time, let's say this orange box goes off, right, which would be right in this beginning. He could look back at the trade and say, okay, so right now, here's the channel that I have from top to bottom. It looks like this, right? And what that actually is, it's real simple. It's the bottom of the lowest hit and the top at that current time of the current hit that he had prior to the 2 hour. That make sense?
Mm-hmm.
So those are your 2 points. The high and the low. And he can just draw the channel sideways, doesn't need any of this information. This whole area after that arrow could be completely blank. So he just draws it out because he doesn't know where the 4 hour is going to come, right? And that kind of that gives him the ability just to have an ideal as he's looking at this of a channel, right? And then he can see by looking at that channel, it starts to form where it starts to hit those channels, top and bottoms, right? So now he knows he's in a pretty good setup there. And now he's just waiting for confirmation of the next moves. Now, as he goes along, you can see here that that 2 hour starts to head down. At some point, it has a correction where the 2 hour makes its move down, right? And then it becomes where it bounces, and then the 2 hours starts again. So it pulls back down, and then here it goes again. It's starting to build up again, see? And as it's building up, he gets his 4 hour alert, right? Which happens on the purple box here, okay? That triggers what we're looking for, which is our entry. Now, once that triggers, we already have our channel drawn out, so we know what it looks like, right? So now you have some ideas of what, you know, your support and resistance are, right? So you know your support is going to be, or your resistance is 137. You know your support is sitting at 136.34. Now it might have had some dips in there that make a change, and all you do is just pull your box down to those dipped areas and kind of say, okay, here's a super dip, and then there you go. So now you've adjusted your support and resistance to the low side of it, and you know, depending on where the 4 hour came in, you know, you have that set up. And now you're looking at like, okay, that's my lowest low, and now you have that middle perforated area. And at the time of this 4 hour, we know right now where we're kind of sitting here. So we know that there's a middle channel here, nothing too crazy. All looks pretty basic, and we're just looking at this we're at the 10-minute time frame, right? So all this looks like, okay, you can tell that this has been going sideways for quite a while, right? Now that we have that in there, we go and do our trade entry, which is the moon reset, and that's where we get these arrows here. And on that moon reset, that would bring us to a section here that these arrows would have been on these candles. So these candles are 10-minute candles, which means our entries would be this area here. I'm gonna get rid of this candle because that one was just explaining if the moon had been green at the time of the 4 hour, but it was blue, which led us right into the green, blue, green. Okay, so our entry here is 135.38. Okay, that's basically where we'd be taking our entry. Now, in the Discord, as you start to make these moves, you would be waiting for the next candle to happen, which would obviously be this next candle here, right? So as this candle starts to close out, you would be entering a minute or 2 minutes. Like normally I like to get 1 minute before the next candle. So this candle happened at 6:10. That means at 6:19, 1 minute before the 6:20 candle, I would be placing my order to get into this. So my entry would be somewhere on the lower part of this wick. So somewhere here on that wick would be my entry, somewhere in there. I'm just going to put it at the top part just because we don't know whether you're going to end up with it here, 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 or whatever. So I'm just going to the top because I need the biggest numbers possible. Okay, so 130, 35, 39. Now let's say I take that entry and I get into my entry point, and what I'm going to do there at that time is I'm going to go to my Discord, and all I'm going to do is basically this. So Ed has a trade. He's going to say XRP long, right? And normally what he'll do before that is he'll do this. XRP 4 hour RSI. Boom. And now what that tells me is that he's in that particular type of trade. Then he's tracking his entry, right? And then when he gets his entry, he's going to put 135.39, and he will just come over here, and all he's going to do is he's going to put his 10-minute, or he can just put his moon reset, right? So 10 moon, right? And then what that's going to tell me is that he's doing a 10-minute moon reset, and then he's going to put his entry 136, right? 136.6, and then he's just going to hit enter. Now, what that does for me is that it shows me that he has an XRP 4 hour breaking the 20, and he's entering on the 10-minute moon reset. So I know he's entering at 133.366. I can go back, look at the data on the chart, see. Actually, his entry would be 135.39. 135.39. I can go back and look at the chart to verify that information. Do you see what I'm saying? To see if he actually, went through and 135.39. And I can cross verify, making sure that how his entry went down, right? Because I can look at it on the chart, 135.39, and I know that he should have entered somewhere here between 135.18 and 135.37, somewhere in there, would have gave him an entry into the trade that we're trying to get into, right? So this is how I can use Discord to verify. The beautiful thing about Discord, it doesn't matter where Ed is. So Ed could post and see how he posted at 9. This post that he put up could have came in at like 11 p.m. his time. The Discord is going to post it and give me my time. So when I'm looking at something in the Discord, I can take that time, go back to TradingView, and locate that time on the chart, because everything's based on my time, even though you did it at your time. So he's 3 hours ahead of me, but it'll print on Discord at my time. So if Ed went to go look at my message right now, my VC admin, it says 7:48. On his Discord, it would be 9:48 p.m. because he's 2 hours ahead on my particular computer. That makes sense? So this is how we can basically stay in. Yeah, we can stay, watching the trades happen and build, and I can go back and verify. So now that we have that, that is how we post a trade. Okay. Now the trade information that we need is this, right? And this is how we're going to start off, where everybody's in the same scenario, right? We're going to do a very simple trade. You don't have to do a heavy trade, any type of trade. This just has to be something, basic. So doing a $100 trade, a $50 trade. If you're if you're in the boot camp, you're more like a 10 or, something like that, $10 trade, $20 trade. But all you're going to do here is you're going to take your entry position, right? I'm going to put it at that level there and say that's our entry. And then we're going to take this information at the end of this trade. All we're going to do is measure at the end of this trade how high it went and how low it went, right? So at this particular time right now, this trade is only, actually it hasn't even gone this low. So the lowest that this trade has gone so far is this level here from the entry. It hasn't even gone below the entry yet, right? As far as going up, it has reached this peak up here, okay? Now in this trade, we're going to set up a very simple process. We're going to put in a 30% stop loss, and we're going to put a 30% target. 30 up, 30 down, okay? Leverage that we're going to be using on this is going to be a simple, I think we should go 30, 30, 30. So it's really not that hard to mess it up. So if you're doing a 30x leverage, you have a 30% stop loss and you have a target at 30%, which basically means if it goes 1%, that's actually my channel. So this would be a 1% move. As I turn that green, that's the winning trade. And then our negative would be 1% negative, so that would be right here. And this would be a 30% loss, right? So those are our two levels right there. I'll turn that red. So these two lines here is 1% up all the way down to 1% down. Those are the two lines. That makes sense? 1% down, 1% up. We trade with a 30x leverage. We have a 30% stop loss. We have a 30% target. That's the beginning. That's what we're starting with. So now, what we're going to do is this. We're going to track this data. So then, when this trade happens, what happens is when Ed enters this trade, it actually jumps up and hits that 1% right away. You see that? See how it hit that trade already? So he's already hit 30%. This trade is pretty much over, right? Now, what he's going to do here is we need to see at the end of this, we're going to still track this trade because we want to see how high it went, right? And then how long it comes before it comes back down to this, level of our stop loss, okay? Which means that let's say that at this point it didn't go up anymore and it kind of made its way down and it hits our stop loss, right? We would go back and say that this particular top here would be considered our high point, right? So if we measured that, we would measure up and say that this went 2.17 up before it triggered the bottom, right, which is the stop loss. Now, during that time, we have an entire area that's inside here, this area here, that we're looking to see what was the lowest point before it went to the stop loss, right? And currently, right now, it would just be moving towards the stop loss. Wouldn't be anything else. So at the end of the day, how we would actually put this trade in is we would go back and we would just put this. We would put a high 2.17, right, percent. Low would just be stop loss, right? Now, that's how we would put it in there. So now we have a very simple up and down. Now, we want to get a little more details in this because let's say that the trade does this. Let's say the trade starts off and we enter and it goes up here and then it doesn't really build to our take profit and it drops down to here, and then after it drops down to there, it makes this big move. Okay, that makes sense? So now we have where it actually went back further than our stop loss right away, but then it made its giant move to the upside. Okay, so what would happen here is we would look at this and we would say, okay, it had a pullback to this level here. So we would basically go and mark that level. And then after that level, it went up to the top here, which is the same high that we had. So now the difference would be is we would measure this downside before it went up to its high level at the current moment. And the numbers are 217, but our bottom is changed from 1% stop loss to 1.89. So the data in here would be, it would be the high would still be the 2.17 and the low would be 1.89. Okay? So now I know that our stop loss is 1%. So I can see here that we lost this trade because it's a 1.89 low. Meaning that obviously if our stop loss was 1%, and which means obviously if our stop loss is 1%, then we actually hit it. But after the 1.89% low, it did go back up to 2.17, right? And I guess we'd write it like this. If we hit a stop loss, we would put stop loss. We'd hit 1.89 was the low, and then it hit 2.17. So we know that we went out on a stop loss, but it did cover after that stop loss. It did manage to make its way to 2.17%. Does that make sense?
So would you like, is that, since it recovered, would you be like re-entering that, or was that just for notes?
Yeah, so that's yeah. I mean, you can yeah, you can play this trade, right? But see, when we get the data, right? Because remember, there's a strategy of the trade we're doing, and then there's the inter strategy, right? So if you do when it pulls back there and you get back in there, that data right there we don't need. But you can say, oh, you know what? Oh, that was a crazy pullback, and then you decide that you're going to jump into that trade here, and then it runs
Yeah.
up and you hit your 30%, you get your money back, right? We don't need that
Right.
data. That's just you staying with your trade, which is okay.
Gotcha.
But what we're doing here is that we have a strategy of the trade we're looking for, and then we have an inter strategy. And then we have to crunch these numbers here to see how many times out of 10 did this trade, what did it do during those 10 trades? Is it winning 7 times before, as long as it's winning 7 out of 10? If it's not winning 7 out of 10 and we have 30 trades to compare, then we have to, while we're going in here, we're going to be making adjustments to how we enter the trade. You see what I'm saying?
Makes sense.
Yeah.
Yeah.
But by having multiple people making the trades, what's happening is that we're getting data and different. So sometimes, depending on your PC, your processing, sometimes your internet, you'll get data in different times, right? Like I've had people like have a moon 5 minutes before everyone else saw a moon, right? So it's kind of interesting. So while we're crunching data from multiple areas, we can have more of a average of what's happening, which then allows me to like really dig into, getting the correct adjustments made that allows us to actually build up here. So that's the beauty of having the majority of that in there. It allows us to like really, crunch more data, and then we can make adjustments. So that is the basics of what it goes. Now, there is another step here, right? And I'll show you an entry. So basically, let's say that entry point that we're having right here, which is just with the 15-minute or 10-minute moon reset. Let's say that it wins 5 out of 10 times. Then we would do this, right? We would go to a 5-minute. And then on the 5-minute, we would use the moon indicator, and what we would be doing here within the 5-minute is we would basically, you see how there's a threshold here? You see these dotted lines right here? Right? Those dotted lines are on the indicator, right? You see those? You see how like there's, yeah. So that's set at a what's called the threshold, right? So if you go to settings, you see threshold, it's at 10, right? If I move my threshold down, you see how the lines change position?
Oh, okay.
So it's at 10, right? Because that's kind of where we found a sweet spot. All depends on what you're trading, right? So all this, like the guys who are in the master course, they'll be taking more information on how to make these adjustments depending on what they're trading and, size of coins and all the other details. There's more details. But what this does right here is just, it's a 10 threshold. Very simple. Now, something that you can add here is that before you take an entry, right, there's a moment that you say, okay, I want the 5-minute, see how we're on a 5-minute chart? I want the volume on the 5-minute to break the 10 threshold, right, which would be here. Then that changes and says, okay, this is another step. So after the moon reset, the next time the 5-minute breaks the threshold, that would be an entry that we would move to. So then it becomes, instead of that candle, now we would be setting up an entry on this candle, which would be here. So now our entry changes because we've changed our strategy on our entry, which puts us where our entry becomes 135.68. You see that? And then from there, we can see what are the pullbacks, what are the tops, and we can evaluate that information. So there's always something we can add to start make adjustments if things aren't going the way they're supposed to on the other side. So most of the time, just so you know, most of the time what you want to have is the 5-minute volume breaking the 10 threshold anyways, right? So that just gives you another layer of security to where you're at. So this entry, if you follow, because the first orange entry here, the moon reset is a way to confirm that you're trading with momentum. Waiting for the volume to break the 10 threshold is a second confirmation of volume. So the moon reset is confirmation to allow it to confirm volume. The volume on the 5-minute above the threshold confirms volume once again. Does that make sense?
I think so. Yeah, the 5-minute, you wanted to break that 10-minute
10 threshold.
10 line.
Right. That's confirmation of momentum.
That's with any trade.
Yeah, I mean, you
Right.
know, they're right. So that's something, as we get data, we'll see how valuable that is.
Right.
Right now, we have a 2-hour RSI, 4-hour break in the 20, a moon reset, which should all give us the prime A trade. And A trade is where the most momentum is basically possible, right, in that particular section. So the 2 hours up, the 4 hours breaking the 20, that's a lot of momentum. And then you have a moon reset, right? And then obviously inside this trade, there's the basics that go like this, which is where, you know, if you go to a 1 hour, and normally, as you look at a 1 hour trade, if we go in here, you'll hear us say, you know, the rules, right? So a lot of the guys will be, there's a rule that we have just to kind of like where people make the decision to use these rules to allow them to be in the right position, right? And the rule is this, that on the 1 hour RSI, you always trade with it. So when all this happens and this all goes down, which basically comes into this section here where this becomes the trade, right? A lot of guys would say that, okay, I need at that moment, I'm just double checking, but I need to make sure that the 1 hour isn't heading down at that moment. And you can see there that it's not. It's actually going sideways and it's still in its upward position. It hasn't crossed the red line until, let's see, until that next little move there. And then it bounces and then it has its final cross over here. So that's just kind of like a rule of thumb that some guys have. But like I said, you know, RSI is more about sentiment. So what we're using the 2 hour and the 4 hour is the larger sentiments that should overrule the 1 hour rule. And we don't know that yet until we do 10 plus trades, you know, done by 4 or 5 people, and we have 50 trades to look at, or 30 to 50 trades, and we can evaluate that information and then decide what else we need to do in order to ensure, you know, success on this particular trade that Ed this is Ed's trade. So this is how Ed looks for a trade, right? So this is how we would document it, right? If it's a successful trade, hits 2.1, and then the lowest it went, you know, at that point, if there's no low, I just mark down whatever low, right? So if my lowest that I've ever had, that let's say I enter on that particular trade, it never goes back to my entry, right? So then what I would do at that point is I would just, you know, take my entry and it would say 2.18, and the lowest would be entry, right? Meaning that it never went lower than my entry. The next one I have there, and I'm going to change this out because if it does lose, then it would be written like this. Lowest was 1.89, highest it went was 2.17 before it started in its downward trend again. Now I know that's a loss because we have the L first and it went down to 1.89, and I know our stop loss is all based on 30 leverage, 30% target, 30% stop loss. So 30, 30, 30. That makes sense? So that's what we're running right now. 30, 30, 30. 30 target, 30 stop loss, 30 leverage. All trading the same thing. 30 leverage, 30 is the target, 30% is the stop loss. And then we just track what we're doing. So something like this, you start off with something simple like smaller bags. So let's say you have $100 in there, then you want to break that up and you want to break that into 3 bags, right? Or 2 bags and a bag you can replace. So it'd be like doing $30 trades, and every time if you happen to lose 30% on the 30, the next time you do a trade, just make sure you have $30 in that trade. So you want to make sure every trade you do is the same, section for yourself. $30 trades, make $30 trades. That makes sense? So that's where we want to go here, is getting everybody on the same page, tracking these trades that we have, and then posting so we have it. So this is where then we collect data, break down the data, and then we're going to regurgitate the information. So the guys in the master classes are going to learn, more information on how to make adjustments through thresholds, bigger bags, growth of the bags, breaking down their goals, their targets, what they're making, how much they want to make, etc. If you're in the boot camp, you're going to be learning, you're going to be breaking down, like we're going to be doing trades that we're tracking, and you'll be part of the tracking of it all. So then you'll see like how to track the trade, how to fix strategies. Okay, here's a strategy of a trade, here's a strategy of an enter. And then we're going to figure out that. And also you're going to have the ability in the boot camp to then, you'll have a day where you come up and say, okay, this is how I do a trade, right? So like tomorrow, we're going to have where we come back up and we're going to have, we're going to call on someone. I'll text you guys and put you inside the chat and let you know. Like, okay, tomorrow, man, we're going to go over your trade. And that's where you're going to explain your trade. Like, okay, I like to trade I normally do a 1 hour trade, and I look for the 30-minute RSI, and I enter on a 5-minute moon, right? So you're going to do whatever you do. Or you can be like, I like to do support. So what I do is I go to the 4 hour, I look for support, I put my buy at this area here, my target is this, right? So whatever it is, you're going to break down your philosophy of how you do a trade. And then we're going to take that trade, just like we took Ed's trade right here, and we're going to create a trade video like we just did today, and then everyone's going to basically look for that trade. So we get to put that in our bag and say, here's a trade that I'm going to track as well. And then tomorrow we'll get another trade that once we break it down after 2 days, we'll have an enter, a move, we'll have another trade video. And then we're just going to track that trade. And then that gives us another trade to do. And eventually we'll have about 4 or 5, maybe even 6 different trades that we're doing. And then we just post them as we go, right? This trade here is simply the XR, is just a 4-hour RSI, right? You see up here, I call it the 4-hour XRP 4-hour RSI. The 4-hour RSI lets me know that it's Ed's trade. It's the trade where he's waiting for the 4-hour RSI to break the 20. Now tomorrow, it might be Joe G. And Joe G's trade might be, the 1-hour moon, right? So Joe, how do you normally find a trade? And Joe's at work, guys, so if he's kind of like in and out, he's kind of there. How about you, Joey? Joey?
Yeah, actually, when I find a trade, like I said, I've been trading a little differently with the high leverage.
Yeah, but which is fine.
I would just watch the RSI, and whenever the RSI was at one of the main levels, usually it bounces up or down depending on where it's coming from. I would get in long, say if it was coming up from the 30, I would wait for it to hit the 30, and then I'd go short and ride the bounce down, probably for a couple minutes, unless I got stuck in the trade if it went backwards on me.
Okay.
And,
So that's what I'm talking about. That's like building a trade out. So I'm going to stop this video here and we'll do another video in a second. But this video here will be the 4-hour RSI trade. And now this will go into the YouTube channel. This will go into the 102 lessons. And then we know like, okay, I need a refresher course on the 4-hour RSI trade. You can just pull up this video, rewatch it, and then come back to how you should